Greetings and welcome to the weekly edition of the Safe Crypto Show. I am your host, Tyler Jordan, with co-hosts Mike and Jason. Each episode attempts to cover a range of topics, beginning with a global market cap review and a look at the past week's movers and shakers. Next, a discussion of general crypto news and happenings. Then we consider new and interesting projects and ICOs, all followed by a brief discussion of the weekly tech update by MadeSafe. Let's get started with the show. Safe Crypto Show disclaimer. Please keep in mind at all times that we, the hosts and guests of the Safe Crypto Show, are not offering or giving investment advice. We only state our personal opinions and thoughts on our own interests. By watching, you agree to not hold us responsible for any losses you may incur by executing trades or by maintaining holds based upon the subjects discussed in our episodes. It is Friday, the 17th of August, 2018. Today I'm joined by my co-host Mike, so let's begin. Welcome, Mike. Thanks for joining the show today.
Hello again.
Well, let's start with the weekly roundup. We got here in the top 10, Bitcoin, number 1, Ethereum, number 2, XRP Ripple, number 3, Bitcoin Cash, number 4, EOS, number 5, Stellar 6, Litecoin 7, Cardano 8, Tether 9, and Monero 10. Well, we've had a really rough week. Things are rebounding sharply and hard today. So that's good. Good to see some things come back. Let's have a look at the global charts here. We see we began the week at 212 billion, and we're ending the week at 222 billion. But you can see in the middle of the chart there, we had, looks like we reached a low of, what is that, 189.8 billion? Very unhappy.
Yeah, it doesn't look too good when it's got that big swoop, but at least it's coming back up from the big swoop. However, It did break through that $250 billion barrier in the past couple weeks. So we'll have to see how long it takes before it regains that mental status level. Quarter of a trillion.
Some traders there definitely got the short end of the stick. And even us hodlers were feeling a bit despondent around that low zone there. All right, well, things are moving back up again. Hopefully we can get to a nice steady growth instead of this radical up and down spiral we've been on. All right, let's go to BlockTivity here. We've got EOS at number 1 again, BitShares number 2, Steam number 3, Ethereum number 4, Bitcoin number 5, Komodo 6, Ethereum Classic 7, Waves 8, Golos 9, and Litecoin rounding up the top 10. Bitcoin Cash isn't even in the top 10. So look there at the, we've been following the Ethereum debacle with its unconfirmed transactions, currently at 79,317. That's it's a bit, keeps growing week over week. I think it's averaging higher all the time. That's really not good. I don't know what the end result's going to be there, aside from huge gas prices in the end to get your transactions completed. It's going to end up with the same problem that Bitcoin had before adopting some of its newer technology, the Lightning Network and all of that. Well, let's have a look then. Let's go on to the second topic, our MadeSafe update for the week. So we've got some highlights here. First off, is they've just started recruiting for a marketing strategist role to be based at their headquarters in Ayr, Scotland. Number 2, they've filled their DevOps vacancy, based also in Ayr, Scotland. The new team member starts in September. More info in due course. Number 3, they have completed the foreign function interface for Parsec, which should make it available to the wider developer community. The pull request is currently being reviewed. That's great news. Number 4, at the tail end of last week, most of the detailed speccing out for the Parsec Milestone 2 was completed, and corresponding tasks were added to Jira. They're all dying to get cracking with these and expect to be set loose on the code again very soon. And last, Ken Andrew, at Ken Andrew, that was his user ID on the forum, is moving on from MadeSafe with his last day being tomorrow. Andrew is moving on so he can spend more time working on his own personal projects. He gets thanks from everyone in the community. So I'm going to read the update on planning here. Over the past couple of weeks, all teams have been working consistently at defining the work that remains to be done before launching the SAFE network. Inevitably, that will raise the question, what is contained within the initial launch of the SAFE network? Well, we are pretty much there with this planning process, and we'll be sharing these details with all of you in the next few weeks. For context, we've had a couple of major wins over the last few months, not least of which is Parsec. These formal proofs provide us with a more quantifiable consensus mechanism to build upon. Please note that this does not mean that we are within a month or two of launching, nor at this stage will we be in a position to provide an estimated timeline. However, the inevitable result of these breakthroughs is that they have brought the launch date much closer, giving us the welcome job of refocusing the goals across each of the teams. So there's much more in the update. There's a marketing section. I've got some recruitment information, user experience, SAFE API and apps, SAFE client libs, libraries, routing, and Crust, and then a goodbye message from Andrew. So please check in and see the full development update if you're keen on MadeSafe, like many of us are, and find out what's going on with the development of the SAFE network. Let's get on to topic 3, the news this week. First news item, analysts say crypto trading revenue could more than double in 2018. New research from Sanford C. Bernstein and Co. suggests that revenue generated by cryptocurrency exchanges could more than double to hit $4 billion in 2018. The report, titled Crypto Trading, The Next Big Thing Is Here, argues that the protracted crypto bear market is unlikely to impact the burgeoning revenue generated by exchanges. Time to buy Binance Coin and KuCoin. Maybe, I don't know. Moreover, as the crypto asset class seasons and institutional demand builds, traditional financial sector firms, including custodians and asset managers, will find a plethora of opportunities, the analysts suggest. Bernstein found that in 2017, the buying and selling of cryptocurrencies generated $1.8 billion in transaction fees alone, equivalent to 8% of the revenue of traditional exchanges. On the basis of the analyst's findings, Bloomberg notes that in terms of segments, only the global cash equities business surpassed crypto trading. We have the charts there. Crypto, U.S. corporate debt, European equities, U.S. equities, and U.S. treasuries. So, the caption there, how cryptocurrencies' average daily traded volume over 30 days compares with major traditional segments. So you can see it's quite significant given that the market share overall for crypto is still quite small. The analysts note that the mainstream financial sector has been wary of entering crypto spot markets amid regulatory uncertainty and market volatility that besets the nascent industry. They add that Wall Street circumspection risks that in the U.S., major crypto exchange and wallet provider Coinbase could end up with an unassailable competitive position. The analysts estimate that Coinbase boasts a whopping 50% of the transaction revenue pool. That's in the U.S. As Cointelegraph reported earlier this week, Coinbase CEO Brian Armstrong has said that the exchange was signing up to 50,000 users per day in 2017, helping customers to trade $150 billion worth in crypto that year. So, pretty massive growth there. And what I'm finding interesting, and what this article indicates to me, is that there's all these different exchanges. You know, there's crypto exchanges, there's regular stock exchanges, there's bond exchanges, there's all kinds of exchanges. And with the profits in crypto being so solid and good, I can see more and more traders wanting to get involved in that sector, even if they're not directly involved. You know, as they get more into it, and we're seeing more exchanges pop up all over the place, more crypto exchanges, and you know, it's just dragging the whole financial sector into it. That's what I see. Over time, everything's going to be crypto in one way or another. Even traditional stocks and bonds are eventually going to be sucked into here and become crypto. I'm not saying that, you know, like NASDAQ is going to go bankrupt. I'm saying that they're going to adopt this kind of technology, and everything is just going to be blockchain-based or based on the SAFE network in one way or another over time. It just seems inevitable to me. Maybe this is 50 years out. I don't know, but I just see this as being quite inevitable.
Yeah, the way I go and see things, I've said, multiple times before that that crypto is the next world-changing technology. And I mean, looking at the various different other technologies that transform the world, it didn't take 50 years for it to happen. I mean, most of them really changed the world in usually 10 to 20 years. And looking at the origin of Bitcoin back in 2009, we're not even to 10 years yet. And, seeing as, when we were both in college, we saw the precursors to what amounted to the internet while we were in college at the particular times that we were there. And seeing how fast that really got traction and really made a difference. I mean, the 10 years from 1989 to 1999, were transformative. And as far as for the crypto, I think once the information is out and readily accessible, it's not readily accessible at the moment, but the information is definitely getting out. And, the knowledge of the crypto and what it can do is becoming more and more, even as day in, day out, time goes by, more and more people are learning about it for the first time, finding out, the profitability for, investment. And most of the people who invest in technologies as they're, just starting out are, they tend to make a good chunk of money on that. But it also places them in a knowledgeable position so that they're able to, make the most out of the new technology as it develops. So it should be interesting to see next couple of years, exactly what really gets traction. And, the changes, I have a feeling, are going to be very, very impressive. It's just a matter of when does this tiger get out of the bag, and that's kind of the way I see crypto in general, is once it gets traction someplace, it's going to be like, Robin Williams is the genie in Aladdin. Once he didn't have any more bracelets on his wrist, he was out of there. And that's where I think the cryptos are going to go, going to be a completely different thing once they actually get traction. And once a transformative project is released. Oh, wait a second. That's MadeSafe.
Safe Network. Yep. Coming soon. Well, let's get on to our next article. We've been following Square's progress in previous shows, so this is just an update here. In the U.S., Square's Cash App expands Bitcoin trading to all 50 states. So they've been kind of gradually letting it out, and now it's available in all 50 states. Mobile payment company Square's Cash App has recently rolled out Bitcoin trading in all 50 states, the firm confirmed in a tweet August 13th. According to the company's announcement, Cash App users are now able to conduct Bitcoin buy and sell transactions in all the U.S. states. Square first launched Bitcoin trading on its app for a fraction of users back in November 2017. On January 31st, Bitcoin trading on Square's Cash App was launched for almost all of its users, excluding those in New York, Georgia, Hawaii, and Wyoming. Co-founded 9 years ago by Twitter CEO Jack Dorsey, the financial services company has reportedly suffered some losses as a result of introducing Bitcoin trading, which the company, however, considers insignificant. Square acquired a BitLicense to operate in New York in June, and 2 months later announced that it generated more than $70 million in revenue from crypto in Q2, compared to $34 million in Q1. Earlier this year, Dorsey claimed that the internet will ultimately adopt a single currency, which he believes will be Bitcoin. Bitcoin currently trading around 6,070 at press time. But anyway, it doesn't matter. So yeah, they're now rolled out. We use Square in my business over here in Australia, so I'm hoping that at some point we'll be able to have Bitcoin over here too. So that would be awesome. Our next article. Venezuela to use Petro as unit of account for salaries, goods, and services. Now, I haven't been too friendly toward the Petro in the past, and I don't know that I am yet, but this is very interesting, I think. Now, the Petro is an ERC20 currency, and I believe it is limited, so it's fixed in amount. I checked that earlier today. I believe it's 100 million Petros or something like that. Venezuelan President Nicolas Maduro has announced that the national oil-backed cryptocurrency, the Petro, will be used as a unit of account within the country. Maduro reportedly announced in a television address that the state oil company PDVSA will use the Petro as a unit of account. Additionally, the government will introduce a new salary system and a pricing system for goods and services that are anchored to the Petro. Maduro is quoted, as of next Monday, Venezuela will have a second accounting unit based on the price, the value of the Petro. It will be a second accounting unit of the Republic and will begin operations as a mandatory accounting unit of PDVSA oil industry, end quote. According to Maduro, the implementation of the new Petro-based salary and pricing system will mean a substantial improvement in the income of workers and will help the maximum retail price to reappear. That would be a great thing for Venezuelans if it works out. Starting August 20th, Venezuela will have two government currencies, the Petro and the sovereign bolivar, the latter of which will be indexed to the former. The sovereign bolivar will take 5 zeros away from the current national currency, the bolivar fuerte, in an eventual monetary reconversion. The central bank will reportedly begin to publish the official figures of the value of the sovereign bolivar according to the Petro and the value of the Petro according to international currencies. Maduro also said that the BCV and private banks in the country have already received the new banknotes. The Venezuelan government launched the pre-sale of the Petro back in February, with 82.4 million of the world's first national oil-backed cryptocurrency available at that time. The country introduced the currency in an attempt to attract foreign investors and to skirt U.S. and EU sanctions, as well as overcome catastrophic hyperinflation, which is projected to hit 1,000,000% in 2018. Now, I think there's other ways they could have overcome their catastrophic hyperinflation. Personally, they could have just stopped printing money. But, oh well. This article makes it sound like it was an accident somehow. I don't think so. According to the Petro white paper, the cryptocurrency fully complies with Venezuelan legislation, though the opposition in the National Assembly publicly claimed that issuing Petro was illegal. While some parts of the document lack fine details and others are not backed by any sufficient arguments, there are some clear economic use cases. Paying taxes and other settlements with state bodies would be at least 10% cheaper with the Petro, which is planned to be expanded into other payment markets in the future. The white paper says that the Petro can be easily converted into U.S. dollars and other currencies, which will help Venezuela in export trade. Still, there's a possibility that it could be purchased with funds that were received illegally at crypto exchanges or privately and then exchanged to oil that can be laundered. Blah, 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 blah. Well, okay. So this is really interesting, though. I mean, you got to take it with a grain of salt because, number one, this is Venezuela, and they've been inflating their currency for some time. But the interesting thing here is that the Petro, being an ERC20 token, is fundamentally limited. Well, ERC is not necessarily limited, but in this case, I believe it is. I haven't actually read the code, so don't take me at my word here. But from what I have read, it's only got 100 million tokens. So if prices for goods and services end up being priced in Petros, then all those goods and services become points of arbitrage against the Petro currency, and this effectively will really peg its value. It seems to me. So unless there's something else fishy going on in the small fine print details somewhere, like maybe it's not a true peg with their sovereign bolivar, like maybe it's just something they constantly adjust. But if people start pricing goods and services in actual Petros or something pretty close to it, their bolivars, I'm not sure, but it could become a pretty solid currency, really solid. So I'm interested to see what happens here. I mean, I'm no fan of the Venezuelan government by any stretch, but this is really interesting, and I think it deserves keeping our eyes on. All right, next news article, CMA Futures partner releases first regulated Bitcoin Cash futures. So they've had Bitcoin futures for a while now, and now the CMA group is releasing Bitcoin Cash futures. Cryptocurrency trading platform Crypto Facilities has added Bitcoin Cash to its list of future products, announcing in a press release the product will go live 4 p.m. BST Friday, August 17th. Crypto Facilities, which rose to prominence when it partnered with the CMA Group on its first-of-a-kind Bitcoin futures in December 2017, said the move reflected Bitcoin Cash's status as a top 5 coin by market cap. The platform already offers Bitcoin, Ripple, Ethereum, and Litecoin futures. So they're pleased to be expanding their cryptocurrency derivatives offering with the launch of Bitcoin Cash Futures. I'm not going to read the rest of it. It's not all that important, but I think it's interesting to see that that's happening. I'm going to be watching now the Bitcoin Cash price to see if it plummets. Our final news article this week, Bitcoin Cash's new token machine gun, inside Wormhole's quest to dethrone the ERC20. So last week, Bitcoin.com CEO Roger Ver and lead developer Corbin Fraser unveiled a new tool which allows developers to issue tokens on the Bitcoin Cash blockchain, hosted on their publication. For better or worse, ICOs and CryptoKitties are probably coming to Bitcoin Cash in the near future, Fraser said half-jokingly, to which Ver optimistically added that they are probably coming to Bitcoin.com too, hinting that his publication might hold an ICO based on new tokens. This became possible with the arrival of the Wormhole protocol, which might challenge the ERC20 reign in the world of crypto tokens. So it goes into a bit of an explanation about how tokens are issued and so forth in general. The cryptocurrency market can be split into two parts, coins and tokens. Former are cryptocurrencies that have original blockchains supporting them. The two most obvious examples would be Bitcoin and Ethereum. Tokens, in turn, are based on pre-existing blockchains to represent a particular asset or utility. Tokens are essential components of initial coin offerings. Normally, a startup publishes a white paper for its decentralized app, holds fundraising rounds, collects investments in cryptocurrencies, and then distributes its own tokens so that investors get their share based upon their input. The overwhelming majority of these tokens are built on the Ethereum network. They constitute nearly 83% of the whole token market, according to data obtained from ICO Watchlist. The most popular protocol used for forging tokens on the Ethereum blockchain is the ERC20, which has been proclaimed as king of the apps. For that reason, ERC stands for Ethereum Request for Comments, and the number is the one that was assigned to this request. It was first published on GitHub back in November 2015 by the app developer for the Ethereum project, Fabian Vogelsteller. Basically, ERC20 outlines a common list of rules that an Ethereum token has to follow, giving developers the ability to program how new tokens will function within the Ethereum ecosystem, for instance, to determine the total amount of issued tokens. ERC20 has gained its reputation by employing user-friendly principles and a simplified structure which doesn't require advanced programming skills. YouTube is swamped with tutorials on how to create a cryptocurrency in X minutes, and the bulk of those suggest doing it via ERC20. Basically, you just have to copy-paste the template from GitHub, choose a total amount of tokens, create a name and symbol, pump some gas and Ethereum in, and a new token is born. Currently, there are more than 110,000 of these as per Etherscan database. The most notable examples are EOS and Tron, which currently rank 5th and 12th respectively. Actually, EOS tokens, I believe, are converted into the EOS network now, so I'm not sure how many EOS are still on Ethereum. I'm not really sure about that. Anyway, although most ERC20 tokens have not been applied for direct use, some of them, like Basic Attention Token and 0x tokens, are still being reviewed to be listed by major law-compliant exchanges like Coinbase, despite their unclear regulatory status. While Ethereum itself has finally been deemed as not a security by the US SEC, ERC20 tokens might potentially represent securities depending on how they are marketed. Despite being within the Ethereum ecosystem, most of them simply represent one's shares in a startup. Consequently, ERC20 played a crucial role in the 2017 ICO craze. Soon after the protocol was widely introduced, the number of ICO startups in the cryptocurrency market increased substantially. Prior to that, the industry had no unified programming standards, coins were unique, and hence interaction with exchanges, wallets, and other applications was significantly hindered. To ensure compatibility, a token software had to be upgraded every time. ERC20's flaws. However, the ERC20, being the first adopted version of the Ethereum-based protocol, has shown a number of problems and shortcomings over time. The most notable one is the batch overflow bug. Basically, when users accidentally send ERC20 tokens instead of Ethereum to the address of a smart contract, the funds remain trapped inside that contract. Albeit over $3 million have been lost by ICO participants due to that loophole, so far the ERC20 developers continue to call it a user error and not a bug. That issue has led to other serious consequences for ERC20 tokens. In April 2018, a number of exchanges, including OKX, Poloniex, HitBTC, and Changely, halted deposits and withdrawals of all Ethereum-based tokens, citing the aforementioned bug. Nevertheless, a number of ERC protocols are lining up to dethrone the ERC20 by attempting to cover its flaws or offer new features. These include ERC223, designed to correct ERC20 errors, ERC721, which introduces collectible tokens, such as the famous crypto kittens, and ERC948, which allows to implement the subscription model, among others. However, now an ERC20 competitor arrived from a completely different blockchain, Wormhole, Bitcoin Cash's answer to the ERC20. Thus, Roger Ver's plan, mentioned above, is to simplify token issuance on Bitcoin Cash's rails and host it on Bitcoin.com. It should be noted that Ver is a renowned adherent to Bitcoin Cash, Bitcoin's hard fork that departed from the original blockchain. Actually, technically, there were two hard forks. There is no Bitcoin anymore. Bitcoin died when both chains hard forked back in August of 2017. That's my addition to this misinformation in this article. Just got to keep repeating that because there's just lies. I mean, people are just completely ignorant of what actually happened back in August. I don't know. I mean, it was pretty clear that two things happened. There was a SegWit fork, hard fork on what's now called Bitcoin, and there was another hard fork to larger blocks with Bitcoin Cash. Both were hard forks, and the original Bitcoin effectively died, but for some reason, one gets to keep the name Bitcoin and the other doesn't. It's really a big scam, in my opinion. Anyway, I'm totally diverging. Back to the article. Ver has been continuously declaring that Bitcoin Cash is Bitcoin via social media, citing the original white paper issued years prior to Bitcoin Cash's release. Another prominent Bitcoin Cash believer, Dr. Craig Wright, recently labeled the ERC20 concept as a dead end, adding that he was looking forward to competition via Wormhole. Wormhole is a smart contract protocol upgrade for the Bitcoin Cash blockchain proposed by a team of Chinese developers led by Jiazi Jiang. Its white paper, available only in Chinese, the moment was presented in July. The development was initiated by crypto mining hardware giant Bitmain, the CEO of which is also a notable Bitcoin Cash advocate. Essentially, the Wormhole protocol allows users to implement a smart contract feature just like the ERC20 does within the Ethereum network without changing the consensus rules of Bitcoin Cash's blockchain. To achieve this, it employs op-return, opcode based on the OmniLayer protocol. Now, some MadeSafers who listen to the show might be familiar with the OmniLayer protocol because that is also the protocol that is used by OmniCore and the Omni Wallet to store MadeSafe tokens, as well as Tether, I believe, is also stored on OmniLayer. So it's been around for quite a long time. It's, in fact, kind of the oldest protocol for doing tokens on Bitcoin and now Bitcoin Cash. Wormhole also supports native tokens called Wormhole Cash. Those tokens are the fuel for smart contracts on the Bitcoin Cash blockchain and are hence required for actions like creating new tokens or listing an ICO. Wormhole Cash is generated through a proof of burn mechanism. To get 100 Wormhole Cash, a user is required to send 1 Bitcoin Cash to the burn address. As of press time, more than 2,300 Bitcoin Cash worth more than 1.2 million have been burned this way. Wormhole Cash has already been recognized by CoinEx, who listed the tokens on its platform on August 1st. Politics behind Wormhole. Praising the alternative token forging process based on Bitcoin Cash's blockchain and moving it to Bitcoin.com seems like a logical step for Roger Ver. Earlier in August, developer Gabriel Cardona, who created the open-source Bitcoin Cash software developers kit called Bitbox, introduced a Wormhole beginner's guide on Bitcoin.com. There it explains how people can utilize Bitcoin.com's developers' tools to create tokens and launch an ICO using the Wormhole protocol. There are 3 types of these tokens, namely tokens with a fixed number, where the cap number of tokens is predetermined, tokens with a managed number, the total amount of these tokens is controlled through granting, revoking, and tokens for crowd sale ICOs, tokens which are later sold for Wormhole Cash during an ICO. For Bitmain, in turn, fortifying the Bitcoin Cash ecosystem appears to be a more constrained decision. Prior to holding its IPO, the mining behemoth reportedly converted most of its savings from Bitcoin to Bitcoin Cash, while the coin has been having an overall unfortunate year in terms of its market value. According to the Bitmain pre-IPO investor deck, they sold most of their Bitcoin for Bitcoin Cash. I don't really see how this is relevant. Anyway, next section. In either case, ERC20 has been challenged. At this point, it is unclear if Wormhole will manage to outperform the current stable of ICO economics, i.e. ERC20. While Wormhole Cash might not feature obvious bugs like the batch overflow one, some shortcomings might be revealed over time. Nevertheless, despite being a relatively new concept, Wormhole enjoys more support when compared to another prominent Ethereum-based killer of ERC20, i.e. the ERC223, which was introduced much earlier, back in 2017, but has still not been widely adopted. While both are yet to receive massive backing from software and hardware wallets, Wormhole has now received a convenient interface platform, making it easier to experiment with new Bitcoin Cash-based tokens. However, while the ERC223 is lagging behind another Ethereum-based protocol, ERC777 could be presented as soon as this month. Well, all that's quite interesting. There's still a lot of value in Bitcoin Cash. Where is it at here on the interval chart? It's number 4, so 10 billion market cap in Bitcoin Cash. So that's significant. I mean, it's more than EOS is. EOS also being another smart contract platform. I think the flexibility on EOS is vastly greater than probably anything at the moment being offered. But just having that market cap value probably makes a difference in companies' choices to use one platform or another, because they recognize, well, more people hold this. So if I do my ICO on this chain, then I'm more likely to get more money. I think that's why Ethereum maintains such a strong position, even though their chain is so overloaded at the moment. But we'll have to see what happens, but I think we could see something happening there. The other issue is how easily will it be to get your coin listed on exchanges if you use this Wormhole protocol. So, well, that's all I have. Have any thoughts? Or
it'll be interesting to see where Bitcoin Cash is sometime in the next 6 months to a year. See if it gets more traction, gets back up to, the $900 a token that it was at, a while back. It looks like they were talking about that in the article. But it will be interesting to see.
The other thing, is on BlockTivity, Bitcoin Cash is all the way down at number 12. It's below Dogecoin and Litecoin. So even though it has that valuation that it does, technically Litecoin has more activity. Litecoin should be more valuable than Bitcoin Cash, by the way I read things. I just don't really understand. To me, Ethereum should be close to number 1, EOS around number 2. Mm-hmm. I just don't understand Bitcoin, below that even in valuation, to my mind. So in terms of use case and actual use, it just doesn't follow to me that they're valued the way they are at the moment. But
yeah, I think EOS will end up getting a lot more accurate valuation once the number of dApps and stuff like that are using EOS instead of Ethereum, and with the bandwidth that they've got available to do transactions, it's got a really significant lead over everybody else, and they're still at 0.35%, not even at 1%. Of their their throughput capabilities. And it's just right. When you see stuff like that, you've got Ethereum pegged for the second straight month, and
it's been quite a long time. It's been over capacity. And keep in mind, I don't think EOS development is done. I think that they still haven't implemented their version of sharding, which is going to basically blow it out of the water from where it is now. I could be a bit incorrect about that, but that's what I understand. This is just the basic platform, which is similar to BitShares and Steem in terms of its capacity, which are all really high because they're that distributed proof of stake system that Dan Larimer has been building on all his systems that all seem to work pretty well overall. So I don't want to sound like just like I'm shilling for EOS, but it does have a lot of possibilities there, and I
just good project
it over time. And the other thing that we've commented about it in the past is just the fact that they had such a huge amount of cash. I don't know how much money did they raise. It was enormous. huge amount, and they're putting that into investment companies. I think they're partnering with different investment companies, and they're using that cash to help new companies develop dApps for the EOS blockchain. So we're going to see a huge amount of development come into the space, just vast. And I can't see anything really coming close to it in the near future or the far future. I mean, even SafeNet, which in my and your view is going to hands down blow everything away in terms of capability. MadeSafe doesn't have that kind of funding that EOS does, and they can't support that kind of dApp development. So I reckon for the next 5 years, EOS is going to be king for sure. I can't see it any other way. But after that, SafeNet might start to take a more prominent role. But we'll see. We'll see. That's just my prediction. It's not investment advice.
Yep, this is just two guys' opinions. So,
Well,
all right.
That's all we have for today, folks. I'd like to thank my co-host and our viewers for joining the show today. I hope you found the episode informative and helpful. Please subscribe, like, comment, and share our video with others. And tune in next week for another interesting episode.
Thanks for stopping by.
Bye-bye.